In the stock market, boring can be beautiful. In this video, we'll tell you about stocks for 6 businesses that aren't exactly exciting, but their stock prices have had huge performance in the past decade, and if the company profits continue to grow, Wall Street analysts believe these stocks could continue to climb. Now, before we mention these 6 stocks, let's just explain how we created this list. And to be clear, this is not financial advice. This is solely based on the stocks that met our criteria. That being, number 1, stocks that have risen at least 500% in the past decade. Number 2, stocks that are recommended by a majority of the analysts who cover them. And number 3, those same analysts have to expect, on average, that these companies will generate at least 10% growth in their profit over the next 3 years. All right, with that said, let's go through our stocks and we will end with the ones that are the most highly recommended by these analysts. All right, first up, Fair Isaac, which you might not know by name, but you probably know its flagship product, the FICO score. Now, this stock is up more than 3,000% in the past decade, and it's been on a big run recently, and yet 56% of analysts still like the stock. In particular, they like its market share, which gives it pricing power. For example, they recently raised prices for mortgage credit scores, and analysts on average expect that the profit story could improve by more than 100% over the next 3 years. Okay, the next stock on our list is Costco. Now, my apologies if you don't find Costco to be a boring business. I love Costco. It's just not as exciting as some of the other stocks that we talk about, but it has had an exciting decade. The shares are up about 500%, and even with that run, 60% of the analysts who cover this company are still bullish on the business. In fact, on average, they think that profits could increase by around 30% over the next 3 years. Okay, another name on our list is Dollarama. This is a Canadian retailer. Its stock is up more than 700% in the past decade. And when you look at the analysts, a lot of them are still bullish. 62% are recommending the shares right now, in part because of the loyal customer base that's often looking for good deals. They give the company top marks for managing its supply chain, and they are growing their store count. And on average, analysts expect that Dollarama's profit could increase by more than 35% in the next 3 years. MSCI is also on our list. Now, this used to be part of Morgan Stanley. This company sells financial data and is essential to many of its customers. The stock is up more than 1,100% in the past decade, and yet 64% of the analysts are still recommending this stock, in part because they like the fact that the company has recurring revenue. There aren't huge capital needs to keep growing the business, and when you look at the analysts' expectations over the next 3 years, on average, analysts expect profit growth of around 35%. Next up, O'Reilly, the auto parts retailer, which has seen its stock rally 580% over the last decade. Still, 68% of the analysts who cover this company recommend it. They like the fact that the company, in their view, is recession-proof and that O'Reilly uses a lot of its free cash flow to buy back stock. And they, on average, those analysts, are expecting the company to see profit growth of more than 20% in the next 3 years. Finally, the most liked stock in this group, and that's based on the number of analysts who are recommending it, is Progressive. Shares of the insurer are up more than 850% in the last 10 years, and the stock's had a big run recently, and yet 70% of the analysts who cover it still like Progressive shares. Now, the company's known for its quirky TV ads. Analysts tend to like how it has outmaneuvered some of its peers in the auto insurance business, and on average, those analysts are expecting that Progressive could see its profits grow by about 11% over the next 3 years. All right, that's our list of boring businesses with exciting stock stories. What boring businesses do you like? Let us know in the comments. Don't forget to subscribe. We'll see you next time.